Have you ever lost money by investing? Well, according to eToro, which currently has 27 million active users, they reported that nearly 80% of their investors lost money over the last 12 months. Now, if we go over to the United Kingdom, there's something called the Financial Conduct Authority, and they actually require brokers to disclose how many people are losing money based on their platform. And those unprofitable trades were anywhere between 69 to 84% of their users. So with up to like 80% of people losing money by investing, how do we make sure we go on the right end of that and not the wrong end? Let's talk about the 4 common ways that investors lose money. On my latest video, I received this great comment right here. It says, can I do a video on what does it mean to actually lose money in the stock market? It's a great question. So let's get right to it. The first losing mistake, buy high and sell low. Now, if you're new to the channel, in January of 2022, I decided to inspire new investors by investing myself $5 every single day into stocks and another $5 every single day into Ethereum cryptocurrency. And I've been doing this for over a year now. If you want to check out more of the details of that program, I'll leave a link to that video in the description below. But right here is an update that I gave in January of 2023 after I've been doing this $5 a day for an entire year. But have a look right now at VOO. Now, this is the one that tracks the S&P 500, the overall S&P stock market. You can see that I'm actually down on my total return by $63.35. Now, that's a critical decision. $63 down, which means if I would have taken all that work from January 2022 to January 2023 of just $5 a day and said, you know what, this isn't working out, I need to sell out of my entire position, which is 5 shares at this time, selling out, I would have actually lost money on the deal. Let alone inflation eroding my money, I would have lost an additional $63. And that's a critical part of the question that was asked on the comment that I received. What does it actually mean to lose money? Well, see, I decided not to sell at this time. I didn't want to lose $63. I want to make money, right? That's the point of investing in the first place. So I'm not buying high and selling low. I'm just holding. And the best way that you can learn how to hold is really just come up with a financial plan. Look, if you're like me, you've had the same mistake. Do you feel me on this? Like the fact that, there are times that the stock market can go way low, like you're down $100, $200, $1,000, or even more. And you're like, should I just cut my losses and sell and just be done with it? But that right there, that decision to actually sell at a loss makes us a loser. And we don't want that. Let's take a look at this example. Because I decided to hold on and not sell for a loss of $63, let's see the difference between January of 2023 and today with my latest update. And this right now is July 5th of 2023. Take a look at how much it is worth now. Now, because I've been investing $5 every day between January 2023 and July of 2023, of course, now I have 7.4 shares instead of only 5 shares. But look at my total return. Much different. I'm now positive $233. Ethereum crypto was even worse. If you look back on my January 2023 update, I was down over $300. If I would have sold my position in Ethereum, I would have lost $300. Today, I'm up well over $322. So the thing is, you got to be able to stomach the swing, and you don't lose money until you make that decision to sell. And the point is, if you build yourself up over a long period of time, and we're talking that financial plan of 10, 20, or 30 years, with a consistent investment plan, you're less likely to be caught in a position where you'll be negative on your money. But the second losing mistake that I see a lot of new investors make, surprisingly, is actually trading on margin. Now, if you don't know what margin is, it basically means you're borrowing money. You're taking out a loan from the brokerage to make an investment. Now, experienced traders do this a lot. What they do is they say, okay, I have my value of my investments, plus you're going to give me a loan for an extra, let's say, $1,000, $5,000, even $100,000 that I can use as a loan. And my goal is I'm going to go in with your $100,000 loan and buy a ton of Tesla shares, for example. And my hope is Tesla is going to keep going to the moon. And then what I can do is sell my shares of Tesla, give you back your $100,000 as the loan, otherwise known as margin, and keep the profit. Because I have margin, I have more leverage. I'm going to make more money. But the opposite can happen. See, people get excited. And that's where I see it actually happening as if it's gambling. Instead of putting in your hard-earned money into the account and growing slowly over time, maybe you can only do $5 a day, maybe you can only do $5 a month, then just stick with that plan. But it's your hard-earned money going in there. And the only thing you can lose is your hard-earned money. So let's say you put in $100 last month into the stock market. The stock market goes to zero. You lost $100. You lost all your money. But the thing is, if you're trading with margin, if it goes down to zero, not only have you lost any cash that you put in yourself, you now owe your brokerage extra money because you took out the loan, and they're going to want their money back. So it's like a double negative. I can't believe how many new investors do this. And they think, okay, this is a great way to get rich. Honestly, this is gambling 101. You're just trying to get money out of the stock market instead of coming up with a financial plan. So if you're trading on margin, be very careful. I will admit, I've gotten screwed up with this before myself. It's not pretty. And as they always say, when you're swimming and the tide goes back out, you get to see who is swimming naked. Don't be one of those naked people. Third losing mistake is savings accounts. Now, this one's funny. I of course, have an emergency fund in a savings account, and I recommend that. You want to have something that's liquid that you can easily pull out in the case of an emergency. But if you're investing all of your money into a savings account, you're likely not doing very well. Even if you have one of those savings accounts that pay like 3 or 4% annual percentage yield, you're still probably losing money because of inflation. Because inflation has been, 4%, 5%, 7%. And so if inflation is at 7% and you're only getting like a 4% interest on your savings account, you're technically losing the value of your money because everything now costs more money. And meanwhile, your account hasn't really grown at all. So it scares me a little bit that people only throw money into a savings account. Check out this graph right here, comparing the difference between saving money and investing money. What a big difference it is over the long period. You have a savings account kind of plateau, and even though you're putting more money in and you're getting maybe $100 in interest every month or every year, an investment account, when done properly with an appropriate financial plan, can grow so much greater than that of a savings account. Fourth losing mistake is actually fees. And I'm not talking about commission fees. I'm just going to talk about the basic fees that screw you. For those of us who invest in ETFs, such as VOO that I shared earlier, QQQ, or anything like that, you got to look at your expense ratio. And all you have to do is go over to something like seekingalpha.com, or you can check on your brokerage, pull up your favorite ETF that you're investing in, and take a look at what the expense ratio is on that particular fund. The goal is anything less than 0.35%. The thing is if you're into these funds that are charging you 1% or 2% a year, man, you're losing so much money over the long term. Think about it this way. If you invested $10,000 into an ETF that charges you a 1% expense ratio, that is $100 every year taken out of your gains. So think about it this way. You invest for 5 years. That's $500 that is just immediately wiped out of your portfolio balance as a result of the fees just for holding the ETF, let alone the fact if the ETF does not perform well, you're like down, double down, and that just stinks. So make sure you really kind of focus on that expense ratio. See, investments don't have to be so tricky. You can go from average to amazing. In fact, that's my goal, and I want to help you get there too. So make sure you subscribe. Check out this next video, and we'll see you on the next video.